Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, July 13th, last day of the week. We had another down day yesterday. However, we did manage to mark a low early on in the morning, and we kind of drifted higher the rest of the day, filling that gap from yesterday, from Thursday into Friday morning, as you can see here. Good sign, encouraging. We are down 6 days. Guys that are swinging short right now really should be cautious and tightening up stops, only because we could get a rip-roaring oversold rally any time at any day. And I'll get into that in a moment. But what did we have last night? We had a big China GDP number come out last night at 10 o'clock. And the numbers were mixed, but the whisper number, they beat sort of the whisper number. So it was soft but not disappointing. Year on year, their figures were worse, but quarter on quarter, they weren't that bad. So all in all, a better number, if you will. There's no question about China is slowing, and there's going to be a pretty decent trade on the playing China's slowdown. And I'll get into that in the next few days or so. But nonetheless, the futures were up about 5.5 handles. They did fade a little bit early on, and now they're bouncing around 3.5, 4 handles, right around about 5:30 this morning since we're up. Today, big earnings report. Wells Fargo, JP Morgan report this AM. So that's going to be another big report due out, and that's probably going to put sentiment on which way we're going to be trading for the day. It looks to me, I mean, obviously, if JP Morgan or Wells Fargo numbers come out pretty good, I just can't see JP Morgan beating expectations with that huge loss that they took. But it could be priced into the stock. Anything could happen in this crazy market. And then we would probably rally going into the day. Maybe sell off early on and then see where we go from mid-morning and then maybe drift higher. Now, in the summer months, the doldrums of the summer, which we are in, usually on Fridays, if we do get some sort of a sell-off, they usually mark the sell-off early, and then they drift higher into the close. So just keep that in mind going into this morning's trading, okay? But nonetheless, we do have few charts which I'm going to show you and some indicators that which is still concerning to me. Bonds continue to make new highs. Obviously, Fed continues to purchase bonds, driving up prices of bonds and sending yields lower. And obviously, they want to create that wealth effect, so there's nowhere to put your money other than the stock market. And that's why we're up at these lofty levels. Otherwise, we'd be down way lower than where we are right now trading. So let's get right into it, okay? S&P 10-minute. I always like to just start off with this, just to kind of give you an idea where we are for. And we really, but if you really look at it, we really have gone nowhere. I mean, that's why when I say be selective in your trading, I mean, unless you're really trading the markets itself, which if you were, you really weren't doing much of anything unless you really caught bottoms and tops. For the last 5 trading days, we've gapped lower, really generally went sideways for the last 3-4 days, and then gapped lower yesterday. And that was a pretty decent opportunity if you were trading the S&P. And these are the spiders, we take that as our proxy. And again, rally into the close, a little bit of push into the close, maybe some short covering. So that's something to take. You can't not deny and take note of that. If you are a bear, you got to be cautious here. Again, if you're swinging short for the next few days. Now we're down 6 days, so caution is definitely warned if you are short and you continue to stay short. So you got to know what are you looking to do. If you're looking to ride through this bump in the road, if we do rally, we are down 6 days. To me, there is a point in time where we're going to have some sort of an oversold bounce, and probably a violent one to be to take note as well. All right, our trusty NYMO not giving us much, -9, meaning that we could still come in a little bit lower. I mean, obviously, I love to see this market down here so I could buy with 2 hands and or up here. And I mentioned this to you the last couple of weeks. Caution here, and sure enough, we got a real nasty sell-off. So this is a real trusty indicator. I always look at this every single day. All right, BP bullish percent index rolling over here. So this is actually healthy, is what you want to see. You don't want to constantly going up on the markets here. So actually, this pullback is pretty decent and unwinding some overbought readings in the markets, and that's something I just kind of like to see where we go from here. Now, since I'm speaking of bonds, I want to show you the bond chart. This is a 30-year Treasury bond index, end of day. Okay, 30-year. bonds continue to rally. And if the bonds continue to rally, it doesn't look like anytime soon this market is coming. The bonds are going to be coming in. Now, again, we are oversold here a little bit, so I wouldn't be surprised if bonds pull back to the 20 or maybe even the 50. That would give us a little bit of push to the upside in equities. But if you look at the weekly chart looks dynamite, and there's really no reason. If you look at that, there's no reason for bonds, to actually roll back down again. And with the Fed buying treasuries, there's no reason that this bond market is actually going anywhere down anytime soon. So something to really keep an eye on. Now, I've always been mentioning to everybody, watch the dollar. And I opened this chart up here because I wanted to show you what the dollar picture is. We are at a big area conflection point with the dollar right now. And we've been rallying quite hard here. If we get through this area and on a closing basis and chop around up here, building another base up where resistance was now support, and we're going to have a run up to this high here at 88.71. If that happens, I could see a nasty sell-off in equities. I don't think it's going to happen on the first touch, so I do think maybe we flag a little bit into the 82 area, right where the 20-day, the 50-day moving average is, because we're above the 20 now. So this is a real important index. You need to follow this U.S. dollar and really study the technicals on this, because if we do break above and we chop around again, we're going to have a clear run for this. Stocks and commodities will sell off. There's no question about it. And how hard they sell off is how hard this dollar rallies hard up to the upside. Again, testing this 88.71. And then I could see some sort of a big sell-off in the the U.S. dollar, which would then create a pretty decent rally in equities, and that would probably be that end-of-year rally, because it would take some time before the dollar come up, unless obviously something really scary comes out of Europe. And again, all eyes are on Europe right now, obviously, until they start getting a grip on what China's doing. And China's slowing, there's no question about it. And that's going to be something I'm working on for a nice big play, which I'll share with you guys once I really get a good handle on what's happening overseas in China. Speaking of China, let's just get into the Shanghai. Had a couple of updates yesterday, which is good, coming into this solid support here. Solid support in Shanghai. As you can see here, our ratio chart, Shanghai S&P curling up, which is a good sign. Okay, we're just trying to hook up here on the stochastics. RSI down below the 30, bounced off the 30. This is a good sign here. However, what could happen is a bull flag into the 20. A bear flag into the 20, and then another sell-off. And if it breaks this, with the U.S. dollar running higher and bonds continue to creep up, then there's going to be a big major sell signal in the market. Okay, and we'll get into some levels right now. So let's go into the charts here. And as you can see, S&P, which is the proxy for the S&P 500 spiders, we did break the 20. We did break the 50. We're hanging by a thread on this uptrend line. If we do break that, it's going to be like a magnet getting to the 130.75. Now, does it happen today? Not sure. It depends on how bad these numbers are going to be for Wells Fargo and JP Morgan. I don't think it's going to happen. Well, obviously, it will not happen in one shot. I don't think so, going to the 130.20. But if the markets really end on a sour note today, I think you'll get some follow-through and get close to this 200-day moving average. So a lot of variables today we got to keep note of, and just really be patient here when you're trading. And don't be aggressive, and look for the best setups. So here, hanging by a thread, we had another doji. Okay, big engulfing red. We couldn't even take back half of that candle. That's what I wanted to see. At least get back up to this area here, a half, and then see where we go. But no, we lost the 20 and the 50 in the S&P. Again, not good. Not a good sign. It's something definitely not you don't want to see. Now, transportation sector, the IYT ETF. This one here is even worse. This already got to the 200-day moving average. So this is actually weaker. All right, this has relative weakness to all the other indexes, and this is a leader in the index, and this is scary. This is not what I want to see here. We need to hold above this 200-day, and with this little inverted, little hammer, spinning top, if you will, we need to really start to move now and take out this high here. 91.33 will confirm this reversal candle here, and then we could start moving higher. At least get back up into this area, and that's something that we're going to be watching closely with the transportation sector. Russell. Gauges risk, right? Risk on, risk off. Well, definitely, clearly for the last 6 days has been a risk off type thing. But the Russell, which is interesting, has been holding up quite well, right? And the Russell actually is above the 20, above the 50, and above the 200, and well above this uptrend line that we had, higher lows, higher lows, higher lows, right? Just create another higher low. So if the Russell can hang in there and can start rallying, I think it'll pull the other index too. I love this volume bar here. So if you're a bull, this is what you want to see. This is something that you like to see on a consistent basis here, at least in this a market pullback for the last 6 days. This is something interesting, and you want to see this continue. Now, if we lose this hammer, then I think all bets are going to be off here to the upside. Qs, ugly chart, no question about it. Lost to 20, lost to 50, and we're getting to the 200-day moving average. Semis have been decimated for the last 6-7 days. They look horrible. There's no question about it, no denying they look horrible. I would not look to pick a bottom here when you're looking to buy semis. I'd wait for a little base building period, 2, 3, 4 days, and then let's see if they can take out a range and then look to buy it, because right now they look terrible. And these are the Qs. And obviously, last 2 days, Apple, which is heavily weighted in the Qs, got slammed the last couple of days, and that's going to help out as well. But look at this increase in volume. This is not what you want to see if you're looking to buy the Qs. All right, this is not very bad. So caution is warranted. We're rolling into the MACDs, crossing over. Stochastics already rolling over, unwinding their overbought readings, which is okay. But we need to hold up in this area here at the bottom of the Bollinger Band too as well. Okay, last chart is the Dow Jones, the diamonds. And again, I like to look at the ETFs for volume, and we're right here, hanging right here again. Broke this uptrend line. This is actually looks uglier than out of all of the charts. This is the worst. So, and I don't really look at the Dow, to be quite honest with you. It's just Dow 30 brick and mortar companies. I really like to look at the S&P as our proxy, and then all the other indexes to follow. But this here, we need to stay above the 200. So if you see the lot of consistency in a lot of the charts, IWM's being the best out of all of them. So that's going to be a wrap today with the charts, but keep in mind Wells Fargo, JP Morgan coming out, and we do have one thing I did forget to mention is the PPI index, okay? And then we have a core PPI and PPI at 8:30. That's also going to be a market mover. So between 8:30 and when the market opens, we're going to have the two reports in that. That's going to actually really put what type of sentiment we're going to be to trade with today, okay? So just keep an eye on that. Have a great weekend, everybody, and we'll see you Monday right back here. Take care.